Hi everyone, George DeSantis here with the look at the market for the week ending Friday, January 11th, 2019. Last week I made a mistake on the cover page and was still living in the past and referred to it as 2018. Any case, let's look at the disclaimer, and it simply informs you that I'm not a professional investment advisor, that what I do here with these videos is simply for, first of all, my own edification. It helps me to organize my thinking for the coming week concerning what I might want to do in the market. And I put it on YouTube and other people can look at it. But I couldn't possibly give you professional advice because I'm not a professional advisor. So you got to find one if you need that. Let's begin to take a look at some of the charts. So we'll start with a weekly chart of the S&P 500 as we often do. If you read Alex Elder's book, Trading for a Living, or the New Trading for a Living, you'll note that he suggests that we typically want to look at the longer term charts before we look at the shorter term. So we look at the monthly before the weekly, a weekly before the daily, etc. The monthly chart doesn't change that quickly, so we're going to start with the weekly. And what we could see here, last week we talked about this 2600 level here being a support resistance line. And right now we close pretty close, 2596.26. And we're just 4 points or so, well, three and three quarter points below the 2600 level. So then the question becomes, do we break above it or do we pull back this coming week? One never knows, do one? But anyway, it's quite possible that we're going to test this low again sometime in the future, as I mentioned last week. That's not outside of the realm of possibility at all. But this chart is beginning to look more and more bullish. And you remember an email that I sent to you with a chart, a monthly chart of the S&P showing that it seems that we're in a cyclical bear market within a secular bull market. So secular bull, cyclical bear. Cyclical bear meaning shorter term, secular meaning longer term. Okay, that's the way I see it anyway. So what we see here is that the 4 EMA curved up a bit. It started to trend up here. We have three nice bullish bars for the last 3 weeks. We're closing right there at the 2600 level, and at the 9 EMA, this red line. So now we wait with bated breath to see if we're going to break above that. And the next resistance level would be somewhere around 27, because you see the 50 EMA and the 30 weighted moving average are both converging now. They're converging on each other. So we can safely say that 2700 seems to be the next resistance level above this here, above 26. Now we have MACD trending up, which is always a good sign. Williams percent R is also trending up, but it still hasn't crossed above that key level of 50%. The sum of the rate of change indicator, this indicator here, that I copied from Jerry Appel's book, one of his books, it's still below the 4% line, but it's trending up, so that's good. But the key one here is the RSI 12. RSI 12 is now at 4168. So it's above the 40% line, but I noticed that it's crossed above the 40% line here, and in each case it pulled back. So we can't get a whole lot confident about this breach right here until we see some more movement to the upside. But RSI 12 is usually a very good indicator on the weekly chart insofar as telling us whether the trend is up or not. Well, so that we have a cyclical bear market within a bull market, which is secular. Now let's take a look at the daily chart. So on the daily chart, you clearly see that Once we hit this 50% retracement level, we had a nice bullish bar. This dotted line is a 50% Fibonacci retracement level, and we had a bullish bar, and then the market continued to rally up with a little bit of a pullback here. But right now we're bumping up, as we saw on the weekly chart, bumping up against that significant resistance level of 26. So we wait to see if we're going to go any higher, or if we're going to come back and test this 2450 or any of these other levels here. Insofar as the other indicators are concerned, you can see that MACD is now in bullish territory, trending up, which is always nice to see if you're bullish. And in this case, on the daily chart, Williams is above the 50% line, Williams percent hour. So that's nice. I like to see that. And the sum of the rate of change indicator, Jerry Appel's indicator, is just about at the 4% line. It's just below it. Now RSI 12 is trending up nicely on the daily chart. It's now above 60%. So I like the way this thing is shaping up, and in fact I'm just about fully invested. I was for the past couple of weeks anyway. Let's look at some individual stocks, or maybe before we do that, let's look at some of the other charts on the S&P. So here's that chart from stockcharts.com of the S&P. It's a weekly chart, and it shows the impulse indicator, which is the coloring of the bars, either green, red, or blue. Last week we saw that we had a blue bar for the first time in weeks, and now this past week, last weekend we saw we had a blue bar, and this past week we also got a blue bar. So this market is looking more and more positive, it seems. A blue bar means that we are allowed to buy the market or sell it short. We can go either way. Now if we look at the daily chart, we'll see that in the daily chart we have nothing but green bars for the last little bit over a week, okay, for about 6 or 8 trading days, 6 trading days. We've had nothing but green bars. So the green bars give us permission to buy. It's a censoring system, the impulse system. It tells you what you cannot do. You can't go short here. You can't go short here according to the impulse system. You don't want to be selling short. So that's on insofar as that is concerned. The other chart we want to look at, revisit, is this one that Alex sent us. You remember he said, look, when you get to these extremes here on the new high, new low index, you need, and you cross above 4,000, time to buy the market. It was one of the reasons why I became more invested, and at this time fully invested, is because I like this leading indicator here. Let's look at some individual stocks on the daily charts. I'll look at a few of them that I own. I own about 6, but a fair size of each, So Tesla is the first one. I bought Tesla back again somewhere in here. And you can see I like the way this chart is shaping up. You have the 4 cross over the 9, and 9 crossing over the 30, MACD in positive territory. And I think Tesla is poised to make a nice move. So I own it now. Again. So here's Etsy. Etsy is one that I own. Carter, that technician that appears on CNBC once in a while, quite frequently in fact, he likes this one. And the rationale, one of the things that he mentioned was that even during the downfall from October, this thing held up pretty nicely. And I think it's a takeover target. It's one of these internet retailers. So I like this one and I own it. Here's a daily chart of Adobe. I have traded Adobe in the past, bought and sold it. So I recently bought it again. I like the way it's been recovering here from this downturn. We had a bullish divergence of MACD, and it rallied a bit and then it pulled back, made a lower low here. But I like the fact that it's nice, trending up nicely here. And these indicators are all above their key levels. So I have Adobe again. And here's Netflix. I told you I loved it when I saw this 2 successive divergences of MACD, and I bought it. I don't remember where, but somewhere in here. So I have a nice gain in Adobe, and I still like it. They're going to declare earnings next week, and I think it's on Wednesday. It's always risky owning something into the earnings, but they're anticipating very good earnings for the period. We'll see. I might make a decision to sell some of what I own. I'm not sure yet. Hey, Salesforce daily chart. Again, looks pretty good to me. Coming out a bit of a squeeze here, not quite pronounced, but a bit of a squeeze, and appear to be riding this Bollinger Band up a bit. So I own this one again. I used to own it, sold it, traded it, own it again. Another one that I own is Atlassian. I think it's an Australian company. I'm pretty sure it's that, and they've done pretty well. And you see this, it rode up the upper Bollinger Band, and it's sort of went into a trading range here. So I still own it. I like the fact that all these indicators are above their key levels. MACD is trending up. There's a developing bearish divergence here, which I'm going to keep a close eye on. A daily chart of Apple. Obviously, Apple has had its problems recovering from this major pullback here. I'm not inclined to buy it quite yet, but it does have a nice bullish divergence of MACD, and it seems to be wanting to rally here quite a bit. MACD looks more positive here than for some time. So we'll see how it develops, but I don't own it right now. Another stock, as you know, that I like, I've mentioned it many times, is Workday. Now, Workday had a nice bullish divergence, rallied all the way up to the upper Bollinger Band, pulled back to what Alex might call a buy zone between the 9 and the 30 and so on, and it's rallying again. I don't own it right now, but the problem is I can't own. There's so many stocks I'd like to own, but I like to concentrate my efforts on a few and follow them very closely. So this one I don't own right now, but I would buy it in a New York second. There's a chart of Intel, a daily chart. It's been in a big, wide trading range here for quite some time, but it seems to be coming out of it here. I was reading something in IBD, and by the way, I'm going to send you on the email, I'm going to send you an attachment with some notes that I made for myself. I'll share them with you. Notes on reading of IBD this weekend, and quite interesting notes. So you'll see that Intel is one of those stocks that is supposed to benefit a lot from the coming 5G internet systems, chips and all that. They're going to be making the chips. I think it's Intel and Qualcomm. They get very positive mention on that score. I don't own Intel right now. I hold it for a little while. Same problem. Too much candy, not enough cash. Here's Facebook. I mentioned in an email that I like Facebook and United Rentals. They have very similar charts, and they seem to be rallying from here. Facebook seemed to be in a nice little, it's sort of a trading range here right now. But I like the fact that these moving averages are above each other, and MACD is in bullish territory, and these indicators are all looking good. So Facebook might just show some life here. And here is United Rentals. I just mentioned it. Similar looking chart. Big bullish divergence here, and since then it's been trending up. So this is an interesting chart. And because it rode up the Bollinger Bands and touched the Bollinger Band, upper Bollinger Band here, it is now consolidating, maybe entering a nice buy zone here between the 9 and the 30 or somewhere in here. Company that's taken a beating now for some time and has major problems financially, etc., is GE. But GE seems to be getting some support again. The alligator is opening its mouth. 4 is above the 9, 9 above 30. And there is some buying. MACD is bullish, and these indicators are above their key levels. As you know, I always like Visa. I don't own it right now because I traded it, And right now it seems to be rallying again. And I like the fact that these indicators are above the key levels. MACD is in bullish territory. Run out of time, folks. Have a nice weekend. I hope you did.